Polkadot just pulled a move that left me literally jaw-dropped over my morning coffee. Now, the crypto that I invested in flipped its entire script overnight, and I can't decide if I should be popping champagne or bracing for impact. So, picture this. It's 7 a.m. I'm bleary-eyed scrolling through crypto news as usual. Suddenly, I see Polkadot DAO approved supply cap. DOT limited to 2.1 billion. Now I literally kind of said out loud, wait, what? Right? Polkadot capped supply. This is a big deal, right? Because if you're not a crypto tokenomics nerd like myself, then let me explain. Polkadot was never supposed to have a fixed supply. It was the endless candy jar of crypto, always refilling. And now, overnight, well, they just put the lid on that jar at 2.1 billion DOT. And someone who's kind of been stacking DOT for a while, that kind of hit close to home. I mean, I always thought DOT would just keep on printing tokens forever. So why the sudden U-turn? I was so intrigued and, okay, a little bit freaked out with my own investment that I jumped straight into our free educational Discord server. There's a link in the description, by the way, to kind of see if anyone else was, losing their mind over this. Spoiler, they were. Now, this video is basically me walking you through what I discovered about Polkadot's big decision, why they did it, what it means for the price and the tech, and of course, for people like me who hold some DOT. So stick around here because by the end, you're going to know whether I'm buying more, selling, or just holding tight after learning all of this. And trust me, there is a twist involving Pi Day, that you won't actually want to miss. Let's rewind just a little bit. Polkadot launched back in 2020 with this idea that instead of having a set number of coins like Bitcoin's 21 million, Polkadot would just keep creating around 10% more DOT every single year. They basically said, scarcity, nah, we want growth and security. Let's kind of pay our network participants with new tokens so that the party keeps going. Now, I remember when I first bought DOT, a buddy warned me, you know that this thing doesn't have a max supply, right? They're gonna inflate it. And I shrugged it off. I believed in Polkadot's tech and figured 10% inflation wasn't crazy in crypto. Well, you can fast forward to now and that inflation model is being thrown out of the window. A community vote, Referendum 1710, just passed with about 81% support. So that's a landslide in crypto governance terms. And it's kind of like a huge majority of DOT holders all agreed that we need to change course here. And the change? A hard cap of 2.1 billion DOT ever. No more beyond that. Why 2.1 billion? Maybe a homage to the 21 million Bitcoin, just with a couple of extra zeros for fun. Essentially, Polkadot's like, we're doing the kind of scarcity thing now, folks. Now, this completely changes the future supply trajectory of DOT. Right now, there is roughly about 1.6 billion DOT in circulation. Without any changes, the old model, we would probably have ballooned that to about 3.4 billion DOT by 2040, 3.4 billion. Now that would have been more than double the supply and potentially tanked the value of everyone's holdings, including mine. But now, with this cap, the projection is around 1.9 billion by 2040 instead. That's roughly 1.5 billion fewer DOTs than originally expected. So let's think about that, right? 1.5 billion DOT that won't exist, right? That won't dilute value. Talk about flipping the script. So, how are they actually doing this thing? You can't just turn off the money printer overnight without consequences, right? Well, here's the clever part. Polkadot's not slamming the brakes suddenly. It's actually gradually easing up, like slowing a car down gently at a red light. They've set up at least a stepped kind of issuance model, which is a fancy way of just saying that every 2 years, they're going to dial down the amount of new DOT being minted. And get this, they timed those step downs to fall on Pi Day. Yes, Pi Day as in March 14th, right? I kid you not, right? Leave it to kind of crypto nerds to kind of mix a math joke with a monetary policy, right? Honestly, you kind of got to love it if you're into it. And you just got to kind of just like shrug it off if you just really don't get why nerds are nerds. But anyway, every 2 years on March 14th, starting presumably on at least in 2026, the facet of new DOT will tighten just a little bit more. So over time, less and less DOT will drip into the market until eventually we hit 2.1 billion cap. So it's kind of like Polkadot's version of Bitcoin's halving event then, right? But happening on smaller steps every couple of years. Bitcoin cuts its new supply every 4 years or so, although it's actually to do with the number of epochs, but everyone kind of thinks 4 years. It's not technically 4 years. It gets actually shorter every time. But anyway, Polkadot will be doing its own mini little cuts every 2 years, right? And it's not saying that, at least I'm not saying that Polkadot's price is going to follow the same path as Bitcoin's after its halvings, but the vibe is similar, introducing scarcity at a predictable rhythm. So when Polkadot's official X, kind of formerly Twitter, I guess, account announced this change, they even kind of polled the community. Do you think a hard cap makes DOT stronger? And I saw that, and I kind of thought to myself, it's a good question. Do I? Right? And the replies, they were a little bit all over the place. Some people were cheering like, finally, DOT can actually moon because it won't inflate forever. Others were a little bit more cautious, like, wait, what about staking rewards? Are we shooting ourselves in the foot here? See, Polkadot's inflation wasn't just for fun, right? Those 120 million new DOT each and every year went to the important stuff, rewarding validators and nominators who stake their DOT to secure the network, funding the treasury to support development and projects, and generally just bootstrapping the ecosystem, even if a lot of those funds were misspent by poor influencer decisions. But in plain English, Polkadot was paying its network participants, mostly, with freshly minted DOT. It's kind of like a startup handing out stock options to attract talent, right? It kept the network safe and growing, but of course it also diluted the token supply. Now, as a DOT holder, I was okay with that inflation for a while because, well, I saw it as fuel for growth. But I would be lying if I said that I never worried about it, right? Every so often I think, all right, my stack is growing, but so is everybody else's. Am I actually gaining anything here? It's kind of like trying to fill a bucket that has a small hole or a small leak in it, right? You're pouring water in by staking and by buying, but the value is still dripping out if the supply just keeps expanding. Now, that trade-off is shifting. By capping the supply and slowly reducing inflation, Polkadot is basically saying, we've grown the network to a good place. Now let's focus on making the token more scarce and more valuable. It's a sign of maturity, really. Now, a lot of crypto projects, they start off inflationary to kind of kickstart participation and then reel it in later. Ethereum's kind of done that now, no hard cap, but drastically cut issuance and even introduced token burns. Still, there's no hard cap, just on for record, right? But Polkadot is now, of course, taking a similar turn, but going full Monty with an actual hard cap. So, how does this affect things moving forward? Well, for one, supply growth becomes predictable. And as an investor, we like predictability. It means fewer surprises in terms of token dilution. And scarcity, well, basic economics says that if demand stays the same and supply growth slows, well, upward price pressure usually follows. It's not guaranteed, of course, because nothing in crypto is ever guaranteed. But historically, assets that got scarcer, tend to actually become more valuable over time. Now, however, we've got to consider the flip side here. The fewer new DOT being created, those juicy staking rewards will gradually dwindle too. Validators and nominators currently secure the network because they get paid pretty well in DOT for doing so. So if that payout shrinks over time, will enough people still want to lock up their DOT and run nodes? That's a big question, and I would say only if the value of DOT increases in line with the decrease of the supply, i.e. the rewards stay in this dollar value very similar. Now, Polkadot devs and community are all aware of all of this, there's no doubt. They'll likely look at other ways to keep the staking rewards attractive, maybe by increasing real demand for the network, so transaction fees and usage rewards actually go up, or tweaking how rewards even work. But it's something that we do have to watch for, right? If the value of DOT increases, not a problem. But, if that's not the case, we have to also increase the usage to increase the fees and so forth. It's a delicate balance. Keep the network secure and incentivized, but also keep investors happy with scarcity. Not an easy task, but not an impossible one either. Now, I suspect that part of why they didn't just cut the inflation to zero instantly is that if they did, imagine the shock to the system. Staking rewards would plummet overnight. By phasing it out over many years, every 2 years or less, a bit less, they're effectively giving everyone time to adjust. It's kind of like, a long tapering process. This way, if any issues do pop up, say validator participation starts dropping, the community has time to react and possibly adjust course via governance. Remember, Polkadot is big on governance. If you agree with it or disagree with it, personally, I think it doesn't work very well because basically whales dictating the bigger moves and all that kind of nonsense. But they can, of course, always vote to tweak things if they need to at some point if things don't work out as they intended. Now, let's get back to my reaction when I first got this news, or when this news hit. I was a little bit hyped, but also a bit nervous, thinking this could make DOT's price take off, or maybe even backfire short term. And it looks like the market was kind of sorting through those kind of thoughts too. In immediate aftermath, DOT's price actually kind of slipped a little bit, around 1.7% in the last day or so. Nothing dramatic, just a little bit of a dip. Interestingly, it actually has been up over 8% in the last week or so leading up to this point. So it's almost like a buy the rumor, sell the news situation maybe. Trading volume also dropped by about 40% to roughly $273 million, which tells me that a lot of traders took a step back to watch what happens next. Now, I pulled up the chart on my phone. I use BitGet for trading, which, by the way, is an affiliate link that's in the description that supports the channel at no extra cost to yourselves. And I saw that, that little kind of zigzag, that spike, the change was approved, right? Then a quick sell-off, classic, right? It's kind of that the market said, cool, news, but bro, we wait and see what happens if anything actually changes. So what happened next? Well, that's kind of the golden question then, right? Because there's one analyst that I follow who's been super bullish. Now, he threw out a potential upside of about 230% for DOT, and he's talking about a price target of around $13 versus the $4 and some change that it is right now. Maybe it's even dipped a little bit lower by the time this actual goes out, right? This video goes out. Now, his view is that the longer a coin's price accumulates in a range, well, the bigger the expansion when it finally moves. And a supply cap, could be the catalyst that makes DOT finally break out. So when I saw that, I'm not going to lie, my heart did a little kind of flutter. $13 DOT? That would be pretty sweet. I mean, I've got some bills I wouldn't mind paying off with those gains. You know what I mean? Now, this might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your own responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Phew, I'm glad that we got that out there. I had to, especially after dropping that $13 prediction talk. But look, right, I'm excited about what could happen, but I'm not telling anyone to go out there and bet the farm on DOT. I'm just a guy sharing what I've learned and what I think of it, okay? All right, deep breath. Let's get back into it because that analyst's optimistic scenario is pretty fun to imagine, but it might take a while if it ever happens at all. In the meantime, I'm actually more interested in how Polkadot will keep its network attractive post-cap, right? Remember, if staking rewards slowly shrink, something else needs to pick up the slack to kind of keep people, well, engaged. Now, I have a feeling that Polkadot is betting on increased adoption and network usage to fill that gap. And they've been kind of making moves with that at least. In August, they launched Polkadot Capital Group, basically a push to bring Wall Street and big institutions into the Polkadot ecosystem. They're highlighted stuff like real-world asset tokenization, DeFi for institutions, and other fancy use cases. The idea is to say that, hey, traditional finance, come build on Polkadot. We've got security, we've got interoperability, and now we've got a token that's not going to inflate you into oblivion. So if they succeed in drawing in some big players or flagship projects, well, that could mean more demand for DOT, for staking or for fees, for governance, which in turn could, support the price and make up for fewer, at least the lower inflation. It's a pretty clever play. They make the tokenomics appealing by adding scarcity and simultaneously make the platform itself more appealing to serious investors and developers. Scarcity plus utility equals a strong long-term narrative. But of course, they have to execute on that plan. Now, let's not forget Polkadot's competition. Polkadot has awesome tech, sure, connecting multiple blockchains, on-chain upgrades without forks, all of that good stuff. But in terms of adoption, it's kind of like the underdog compared to, let's say, Ethereum. Now, I read that Ethereum has over $130 billion locked in its TVL in the DeFi ecosystem. Right? Meanwhile, Polkadot and its parachains have around $423 million. So there's a huge gap there, right? Polkadot's basically the smart, innovative kind of kid in class who hasn't been invited to the cool parties just yet. Ethereum, meanwhile, is throwing kind of rages every weekend with everyone and their dog using it. So why do I bring all of this up? It's because for Polkadot's new tokenomics to really shine, they need to actually get the adoption up. Right? More people, or at least if more people use Polkadot, if more devs build on it, and if more money actually locks into its ecosystem, then having a capped supply becomes extremely powerful. Now, it would be like having a golden ticket in a popular theme park. Everyone kind of wants in, and there are only so many tickets. So right now, Polkadot's park is, well, filling up, but they're laying out the welcome mat big time, right? The good news is that Polkadot's fundamentals are pretty solid in my view. They've got cutting-edge architecture and a passionate community for sure. The governance is on-chain and, well, questionable at best in my opinion. You know, I have seen their governance fail, in my opinion, many times over, specifically because it's dictated and controlled by just a few. Anyway, they have this vision, I should say, of a multi-chain future that a lot of people, myself included, find rather compelling. Now, all the pieces are there, and now with this new tokenomic shift, the incentives might line up even better for the longer term growth. So with the supply cap in place, the community basically signaled, all right, we're in this for the long haul, and we want DOT to thrive in value, not just in the utility. Now it's on Polkadot's team, and frankly, all of us DOT holders and users to drive that value by actually using the network and, I guess, visualizing its merits. But here is the biggest problem. You can build it, but people will not come if you do not advertise it. And advertising is blockchain projects' number one problem, in my opinion. There is not enough marketing efforts going out there when it comes to these ecosystems. And I don't just mean paying, an influencer $100,000 to do free Polkadot videos. It's just lunacy, right? It's more important to actually have long-term vision, a proper marketing campaign strategy, and some proper thought process behind the marketing. Because we do not live in times where we build it, they will come, works. Now you build it, you market it, and if you are marketing well enough, then they might just come. Now, let me bring this back to a personal level for a second. Now, I've been investing in DOT because I believe in its tech and the idea of interconnected blockchain universe. But I always had a tiny little worry about the endless inflation and the governance. The governance is a big issue when it comes to Polkadot, after having experienced it myself. So it's like having money in a bank account with a decent interest rate, but the bank keeps printing more money for everyone else too. So your relative share, never actually really quite grows the way that you thought it would. Now, seeing Polkadot address that with a cap, I feel a little bit more confident. It's kind of like, okay, they're looking out for the long-term value of this thing, right? It's not growth at all costs, right? And that said, I know the supply cap alone will not guarantee a moonshot. It's great to have it as a foundation, but the house still needs to be built. You still need to, of course, market the damn thing. So if Polkadot keeps expanding its ecosystem, brings in some more users and projects via marketing, and proves its worth against its competitors, then the cap supply is going to be the gasoline on the fire, at least when things really do start to heat up. But if not, well, a cap supply of something that nobody actually knows about or wants to use isn't going to magically make it valuable. It's harsh, but it is true. I actually find it pretty cool, maybe even poetic, that they chose 2.1 billion as their number. Right, Bitcoin has 21 million, throw a couple of extra zeros onto the end and you get to 2.1 billion. So it kind of feels like a nod to the granddaddy of scarce crypto, Bitcoin, while recognizing Polkadot's a different beast with a larger supply. It's a small detail, but it made a crypto history nerd like myself smile a little bit. And who knows, maybe Polkadot's move sets a precedent here, right? If this does work out well, and if DOT's price and ecosystem strengthen, noticeably or sees noticeably improvements from it, then don't be surprised if you see other projects with infinite supply models suddenly start talking about caps or buybacks and burn programs or whatever they need to introduce the scarcity element. Crypto is an experimental space, at least it seems that way, with a bunch of nerds at the helm and teams that borrow good ideas from others. And I use the word borrow because it's, stealing's a harsh term, but they're going to borrow ideas from everybody else. And Polkadot might just become the case study that everyone references. Maybe. It's a big if, in my opinion. Remember, right, when Polkadot capped its supply and then fill in the blank happened, right? It's possible, but I'm not holding my breath. So after I kind of finished reading the news and kind of, I guess, downing that second cup of coffee, I thought back to when I first got into Polkadot. Back then, the kind of buzz was just about the technology and the potential, right? The tokenomics were kind of an afterthought for a lot of us. We were kind of like, okay, Polkadot's going to connect all of these blockchains. Parachains are the future. Fantastic, right? But who really cares if they print some extra DOT tokens? That's tomorrow's problem. There was this almost utopian kind of confidence in the very early days, right? Because that's when I got in, really early, right? Seeing Polkadot as now kind of adapt this kind of new tokenomics, a few years, tells me that they're willing to listen and evolve. It's actually a little refreshing. It's like a company pivoting to, at least in a smarter direction after hearing all the feedback. They've realized that maybe that they need to attract that next level or next wave of investors and users. They actually need to tighten up their economic side of things. And so they did it. Now, of course, right, the cynical side of me is quite apparent. Maybe they didn't just do it for us holders, right? Maybe they looked at the kind of numbers and thought, we don't actually need to print that much anymore to keep things running. Or maybe it's just a bit of PR that they can try to use to get some new money coming in, right? Because, well, the price action hasn't exactly been the best, has it, right? And, maybe the treasury just doesn't need any more DOT. Maybe it's well funded enough and that they actually can afford to just slow things down. That's also a possibility, right? A practical kind of decision as much as maybe a community pleasing one, right? Because let's face it, this is a governance decision and a few whales probably don't mind the idea of boosting their bags, right? But hey, at the end of the day, the result is the same, I guess, for me. DOT becomes finite resource, even if it don't happen overnight. And I'm not going to complain about that. So what am I doing with my DOT now? Well, honestly, not a lot. And I haven't done a lot with it for a very long time. It's just sitting there. I don't stake it. I don't do anything with it because I need to be agile. I need to dump this thing the second that I can, right? I've accumulated DOT, and maybe because the price action's so down, I might accumulate a little bit more for a quick 5x at some point in the bull market, right? But I'm not married to Polkadot's ecosystem. I am not married to DOT, and I'm not going to see this investment do anything crazy in my humble opinion. I think that Polkadot has potential from a technology standpoint, but I think it's run poorly. I think the governance is run poorly, and I think it's controlled by a few with poor decision-making capabilities. And so I'm not doing a lot with Polkadot. I'm looking to flip it. I'm looking to exit my DOT position. This is not a long-term position. This is not a long-term hold. This is something that I am not married to. As they say in crypto, you should never marry your bags. It's good to see that these things and developments are happening in the space, but Polkadot is probably one of the first cryptocurrencies that I would be looking to liquidate. It has limited upside potential from a charting and technical standpoint, and it doesn't really have any of the decent kind of marketing campaigns behind it. They've not managed their treasury well. They've overspent in many areas, and these are signs that this ecosystem is going to struggle going forward. Whether they cap the supply or not, the fundamental things that need to change are actually at the leadership level. They're within the governance models. And if those things do not change, then why should I consider this a long-term position? Polkadot for me is a quick flip. And so you may have noticed that we don't typically talk about Polkadot very often on the channel, and it's for good reason, right? We are not being paid to shield Polkadot like many other influencers are, and we disagree with a lot of the fundamental things that are happening at the top level. And so we are invested in Polkadot, and if you want to know more about Polkadot's ecosystem or things that are going on, then we do talk about it with our paying members down in our Discord server. But what we don't do is just shill the shit out of something to pump our own bags on YouTube, despite what some of the comments might think. Ultimately, we're only really interested in projects that have true utility and long-term value proposition for their investors. And at the moment, Polkadot doesn't really fit those bills. I found this an interesting topic to talk about on today's video, which is why I brought it up with the change in tokenomics. And there's always the potential that things do change, that maybe the governance model will get fixed in due course, or maybe that, their leadership can change and actually this is a positive direction that's going to see this ecosystem flourish in the future. And in which case I can take back all of my thoughts and opinions about where I think it is today with being just a short-term hold. But as it sits for me, I thought that this was an important one to kind of talk about how the tokenomics are changing, but how I don't see the long-term value proposition for investors actually pivoting all that much on the back of this news. You can let me know your thoughts, of course, in the comments down below, or join us in the free Discord server. I welcome everyone's thoughts and opinions. The only thing that I do say here is that we should try to have open debates with openness and not with kind of hostility and tribalism in mind. Let's just be open. If I've missed something, I'm open to changing my opinion. But ultimately, as it sits right now, I'm a Polkadot investor. I hold Polkadot, but I'm not staking it. I'm not participating in the network. It is a speculative investment where I see some potential gains in the future, and I might double down, but I'm not thinking long-term when it comes to it. So if you found this update useful and informative, smash the like button, subscribe for more, and I will catch you all in the next one.